Good morning, good evening, good afternoon, wherever you are in the world. This is John with Tommy's Top Picks here to bring you your weekly flesh and blood market update. Let's jump in. A lot of bad news. A lot of things are down. I don't know what's going on. Maybe, I don't know, post event doldrums, new sets not out doldrums. I don't know. Don't like it though. I will tell you that. I'm starting to get a little concerned about the nature of this market, and there's a couple patterns I've noticed which do make me wonder if we're going to turn it around in America or not. If you're a collector and you're out there buying boxes, tell me I'm wrong, because the data is saying otherwise. But let's dive in. All right, starting off with ARC Unlimited boxes down 12.5%, $88 a box. We haven't seen this price in a long time. That is a very low price for something so old, something relatively rare, and it makes me sad. I don't like it. Tales of Aria down 10.2 to 49. We haven't seen that in a few months. Not that big of a deal, honestly. And it's Aria Elemental. There's no use for the cards, unlike Arc. It's always floated in these low ranges, but it's definitely down. There's a lot of boxes on the market, even though Unlimited is relatively limited compared to First Edition, I think. Moving on, cases. We're talking about Arc again. Unlimited cases down to 484 from 516, 6.61%. That sucks. This was one of those like, hey, maybe it's gonna go up, maybe it's gonna go up, and hey, maybe this is a retrace. It is notable, and I have and would say this in any past situation. We spiked up. We're retracing a little bit, kind of going to the mean here. And we ended up higher than the previous low. So this is actually a fairly good sign. We'll take a look at this chart because the down drip ended up higher than the previous. It's not bouncing back to where it was. It's bouncing back to a place in between the two. So this is typically an upward pattern. And like I said, we'll look at the chart to see if we can derive anything from it. I think we talked about that last week, that we'd look at it again this week anyways. So overall, the ARC case thing, unlimited case, seems pretty positive as far as it goes for individual prices. But I don't like this box drop. That makes me sad and concerned because that is different. So anyways, moving on down to Crew First Edition box 415 from 435 down 4.82% for an honorable mention. I don't know. We've kind of bounced in this range. It's pretty low. Like we had this 399 back in February. Before it spiked, and it held this spike for quite some time, which was pretty cool, but now it seems to be drifting back down towards that range. So I think we're just going back to where that low was. Yeah, let's look at Crew and let's look at Arc Unlimited, go from there. Everfest down to 45 from 52, not that big of a deal as far as the drift down. It's a 15.5%, but honestly, I think this is just a dip. It's very weird for Everfest to get this dip though. Everfest has typically had some decent volume, some movement, etc. because of the power of the cards. I'm starting to wonder if maybe these newer sets are just creeping past Everfest's ability to hold up, and there's just still a lot of product out there. I do know, at least in my own personal situation, I had more Everfest on the shelf than probably any other product, just because that's when I came in and got most excited. I think they printed more than a lot of things, even though they never did the unlimited. So I think there's just something around this one that's just, there's just too much product out there. Unfortunately, this is the case for most of these, and there's some interesting patterns I'll talk about in a second. So let's move on, get this the numbers out of the way, and then we'll talk about that. Everfest First Edition cases down 5.29%, not a big deal, to 208 from 219. It is lower than we've seen, and as you note, if you look at the history of the chart, we've just been drifting down, 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 down. Not great. Uprising down 5.68% to 264 from 279, and again, kind of downward drift. We did have a little upward spike, but I think we're just over that hump. That one's not too crazy. Well, it's a 2.0 product. Uprising was not one of the more popular ones, I don't think. And it has Icelander in it, which is an elemental hero that's LL'd. Oh, you know what else? Dromai's LL. Could all this be because of Dromai? No, definitely not. But Dromai LL, so that's going to be a factor for some of this, including Uprisings dropping. That's the player's game for you, player's market for you. If that happens, that's where you go. All right, so some patterns I've noticed that make me a little sad, and it's been in place for a while, but it's become more and more clear. Let's show you the numbers here. Heavy Hitters is holding at 304, held it for a while. Evo 289, held it for a while-ish, called a month. 299 for Dusk Till Dawn, month again. 275 for Outsiders. That's actually a spike up from a month ago. 307. This is the outlier on the pattern. Are you guys seeing the pattern I'm pointing out yet? 264. That is down, but it is within the range of the pattern we're talking about. For Uprising, Everfest 208. LE 199, and then now Monarch changes the pattern. Do you see the pattern of these numbers? Now it is a pattern that's somewhat emerging because, like I said, the further back it is, the more recent it's kind of aligning this way, but it is worth noting. The latest set is worth the most. The older set, especially in 2.0, is worth the least. Is this 100% players market, no collectors? Because that's what these numbers and this pattern says to me. It says sell immediately, and it says do not hold because prices do not go up. Everything that is up from historic areas, like from basically map, is, and I don't even think Mon is map. I think it's at map or close to it. Mon first edition, right? Everything above that, and we can go to boxes, same pattern, right? Everything above map is super old and in the bubble time frame. Everything after the bubble. These are all bubble items. They're only holding it because of price memory, not because of demand. It's because people won't sell it for lower than that because they probably bought it too high, like me in some of these cases. So people are just holding on to it, waiting for the prices to go back up. But if you look at a player's market, this is what it looks like. Older it is, the less valuable it is because they're relevant to the play, especially with the LL and all this other stuff. Starting to see players market play out for Flesh and Blood. And if old boxes don't hold value, like if you just ignore the first 3 boxes, these old boxes don't start to pick up value. And this arc dropping really puts me in the worry zone on that for this unlimited situation. Then we're looking at a situation where it's not worth collecting or holding on to any of this product, right? You get the cards you need to play, you sell them as soon as you don't need them, as soon as you can, because they're going to be worth the most as close as they are to release, and a couple sets, like release and call it 3 sets or something, right? Where they're still relevant to the meta before things LL, before it cycles, etc. Yeah, I'm starting to note this. I don't know if it's a full factor pattern it's worth keeping an eye on, but it does seem to be the case. It does seem to be something that's emerged as a true, like almost linear pattern. Not 100%, but it's very close to a linear pattern, in which it's very hard to ignore that if that's the case. We've had a lot of fluctuations historically, different spikes, different things going up and down based on meta. But I do think the overall pattern is the most recent is the most valuable. Anything old is not worth it. And the saddest part is that it's definitely represented within the 2.0, which means they did not fix 2.0. You know, my assumption was that the later sets were getting better, which may be the case because they do hold longer. They do have some factors in their favor. But I just think if this is a supply-based driven pattern, it wasn't done fast enough. It's not done well enough. And unfortunately, it's impacting the whole market, which makes a lot of Flesh and Blood stuff not that collectible from a holds value, and eventually will sell for more standpoint. What does that mean? What does that say? I don't know. Give it more years and we'll know for sure. But we're now at a point where we have some time of data, right? This is not a small amount of data. This is quite a bit of data, years of data. And we're seeing this pattern still. And I haven't seen anything sell out within Flesh and Blood. Not a single product is gone, is unpurchasable. Nothing. Even, well, I suppose the cases of ARC and WTR. Although, nope, sorry. Card Shop Live, this box, this case is $6,000. If you want it, you can get it. WTR, I don't think you can get anywhere. This is the only product that is truly, actually inaccessible WTR cases, first edition. And now we're at what, year 4? 19.5? Year 5? That's a problem. That's too much. Too much product on the market. So I don't know if they're going to severely cut supply to try to change this. Obviously, they want it to be available for a while, but do they want it to be available for 5 years? That seems excessive. It definitely drives people away from a collecting standpoint, holding standpoint, etc., which reduces purchase, which reduces demand at shops, which reduces the supply orders at distro, which reduces the buys from distro. And ultimately leads to a death spiral. Now, will that actually happen? I don't know. It might be a little dramatic to call that now. But these are factors that do impact games, especially in a market that is now as competitive. Because you got to remember, when Flesh and Blood came out, there was not new games. 2020 indie TCG explosion happened. They beat that competition. They beat the snot out of it. 100%. 100% give it to them. As far as the upstarts, they crushed it. 2024, we're looking at big funded major IP, Star Wars universe, Lorcanas, etc. And enough, I don't know if I'd call it ill will, but enough grinding on people in different ways. Either bad release issues, too much product, too little product, card spiking, can't get new players in, whatever the complaint is of the group, right? There's different complaints depending on who you are and what you're talking about. I know new players complain about expensive equipment and how hard it is because it's too competitive. I know competitive players complain about new players. Like, everyone complains about something. Point is, that all leads to little bits, chips, and dings and fractions on the overall sheen of a product like this. And this is why your 5 to 7 year period is a failure point for startups. You lose the the goodwill of being new, the new kid on the block, because you're no longer new. And you haven't quite gotten to the stable long-term, I've been here, I've done that, I've survived some downturns. Now, what this means is, say this is a downturn, which we don't know. I'm going to continue to follow data to see. If this is a downturn and they survive it, they will be stronger than ever. And these older products will be worth something. This is how it goes if they survive this challenge. But we're at a point of challenge. There's a lot of competitors, well-funded, grabbing attention, and very well designed, built games, like equally as good, I would say, in different ways. And when I measure good on market performance, because that is the ultimate objective data point, right? People spending money. So while Flesh and Blood could have a tighter system than Lorcana, which it probably does it drive as many dollars? No. Objectively, no. So when you look at these factors, this is what determines the survival of any game, of any company, and you got to look at where the money goes. Now, yes, do it as a passion project. Yes, do it because you believe in something. Yes, all these things that people want to romanticize and believe in, absolutely agree. But at the end of the day, if you can't pay your bills, you go away. So these factors matter. There has to be a balance between the financial component that drives the world. I have plenty of complaints about the way the world is driven via capitalism. Happy to share them with you as a capitalist and someone that believes there are major errors and flaws in the capitalist system that could be corrected relatively easily. I would say most of them are actually outside of capitalism, but that would require understanding the philosophy of capitalism to begin with. Anyways, point being, I think there's some concerns. I think it's a good time to be concerned because that 5 to 7 year period is the high failure rate period after the 3 year, right? I've talked about this with Tommy millions of times on the pod and many, many times on here as well. This is the next big test for any startup company. This is where you see failures heavily. And it's worth noting and being aware of what's happening and following the data and see what the data says. Data says struggles. So if the secondary market is struggling this heavily, if product is not disappearing, that's a lack of demand and or too much supply, and then you start seeing issues arise. because it trickles through the system, as I just described, to the point where a distro doesn't order as much. And if that happens, guess what? That affects the bottom line for LSS, and that is the number of employees they can pay, the size of the building they can occupy, the amount of art they can, commission, right? All these things become real factors if distro starts reducing sales, and distro starts reducing sales because of the chain of events I just described. So let's keep an eye on it. We still have a few years till a 7-year mark, but a good chunk of companies fail at this point. I think the majority is something like 90% in the first 3 years. And then of the ones that survive, it's like, I want to say it's like 60% fail in that next few years. And then from there, the lucky few survive. So I think it's worth keeping an eye on. I think it's worth watching the data, but there's some patterns here that are kind of macro. And I know. A few weeks ago, I said there's some signs that things going well. Well, there were. The data was pointing in that direction, and now the data is showing something different. So I respond to the data. I know it can mean I change my opinion. I apologize for not sticking to things that aren't showing true in the data. I follow data. I don't care if that means I change my opinion. I will follow the data always. Good thing about that is that means you'll get the latest and greatest based on the data. Bad thing about that is sometimes you'll think one thing and then the data will prove that thing wrong. That's just how it goes, and it's unfortunate. I wish I could always be right and foretell the future like a crystal ball, but anyone that tells you they can do that is a liar. Run away. Don't listen to them. It's just bad news. No one can tell you everything or predict the future, especially in financial markets. All right, let's jump into a little bit of macro stuff. It was interesting today. I think it was today or yesterday, something like that. Jerome Powell, I think it's how you say his name, Jerome Powell. Powell came out and said that they may hold on cuts. The market that we talked about last week, the job market, CPI, and a few other factors basically led them to be concerned. As a result, the markets that essentially predict the odds of rate cuts at different points have jumped the rate cuts all the way to early 2025. That is an outlier prediction, right? So that's a bell curve, right? It's not like everyone predicts one thing. It's I actually don't know how they do this, scatter plot or something. They take a bunch of different people's predictions or bets or whatever, because I think there's actually a market you can it's like a futures market essentially for it. And you take that data and it spreads. So you get this bell curve of most likely, least likely, and kind of the low-lying long tails on both sides. One of the long tails on the future side, far future side, was early 2025, which is the first time that's happened in recent history, basically since people have been trying to predict when the heck they're going to make cuts. So it's moved into 2025. Part of that is just a function of time. As time goes forward and there's no cut, that prediction goes forward. Part of that is because of this statement by Powell that basically said, hey, maybe not. I mean, when they expected 200,000 jobs and they got 300,000 jobs, that was a big factor. It was huge. It was a huge factor. This is going to lead to some additional pressures on the market that they are not ready to let go of. So there's even a small chance, again, other side, long tail, that they raise rates again. I'm not sure I'm willing to go there yet. I'm also not willing to count it out. So I don't know if my opinion means anything to you, but if it does, that should say something. It could theoretically happen if we continue to see heat through the year. I will say US, of the G7 economies, which are the biggest, most developed economies on the planet, of the G7, the US has recovered at double the rate of every other G7 country. Double or better. That's insane. That is insane and shows the strength of the American economy, the willingness of the American consumer to spend, and the strength of our ability to recover from bad situations and just kind of move money into ways that become beneficial and cause growth. I think a lot of that has happened both naturally and somewhat artificially. And when I say that, I mean investments made to prop things up and push things forward that wouldn't necessarily be the smartest, like all information given investments, but they are good investments. If you have X, Y, and Z in place, then doing investment A supports X, Y, and Z, and therefore doing that, even though it might be a bad investment in and of itself in a box, is a good investment when you have these other things lined up and can benefit from kind of the ripple effect of that. Trying to think of a good example of that, but it does happen from deep vertical integration. So think about investing in the marketing of a third tier product. So a product that has, I'm going to just make it up. You make a widget and it uses a gear, and that gear uses steel, and that steel uses coal to get the steel, right? So it's a 4-tier production cycle. Investing in the advertising of widgets has an impact on the gear making, has an impact on the steel production, has an impact on coal, right? It's a ripple effect. And if you own widget making and steel and coal, guess what? You're helping your coal and steel by making the investment in widgets, even though you know there's not extra demand for widgets and you're pushing up against the very barriers of widget sales. But if you can eke out that extra, it creates this follow-on effect that can benefit the downstream stuff. That's a very bad example, but it's an example. I'm sorry. I wish I had a more real example, but it does happen all the time, especially with a highly integrated economy like the U.S. I know I complain about monopoly and oligopoly in America, but this is one place where it actually is beneficial because the economy can be pumped in more succinct ways, specifically around different times. Doesn't mean it's artificial. Doesn't mean it's not real. It means it's emergent from the nature of the highly interconnected integrations and near monopolistic ownership that we have in this country. Moving on. Yeah, there's actually not that much else as far as economic news. There wasn't much beyond that. I would say it's good for the economy that we have more jobs. It's good for the economy that we're moving forward in a positive way, and they don't want to make cuts yet. Cuts come with collapse, fall, issues, downside, job losses, things like that. And no cuts means healthy economy for general people, healthy paychecks, that sort of thing. Bad side is inflation starts to come back. We'll see how that goes. I think some of that's going to be tempered, because I do think a lot of the bigger corporations that were doing the greedflation thing got the message that the public saw. It took months, years, for some cases, for people to note it and call it out in the news and people to get mad about it and people to actually push on it. You're seeing more unions, which I think is healthy. It's a healthy counter to monopolistic behavior and greedflation. So when that money is going towards labor pay over stock buybacks, you end up actually having a healthier economy. 1950s is calling. If you're not familiar, go study the time frame between the end of World War II and called like the 70s oil crisis. It's very telling information. We had the highest tax rate in the history of the United States. I believe the top tax rate was 90%, and we had a booming economy. What does that tell you? Tax cuts are not the thing that causes economies to boom, because that just causes money to be hoarded, which means lack of flow of money causes economic stagnation. Anyways, don't want to get into a philosophical debate here, but reality is tax cuts do not lead to boom times. Middle class purchasing power leads to boom times, and we have a lot of data that supports that. Anyone who tells you otherwise is straight up lying to you or have been bamboozled themselves. So yeah, and the data's there. Go look it up yourself. It's there. So point being that when you start seeing a strong working class with higher pay raises and a little more flexible spending capability, you see a lot more flexible spending. Kind of like the stimulus checks cause people to buy stuff. Now, when it's on a steady basis instead of a one-time big chunk, you end up with more responsible spending over time. That's actually the ideal way to get that kind of money out, and we have proven experiments about that as well, where they had... trying to think whether it was I think in Canada and like somewhere in the US also did this like fixed income thing where they gave everyone some money. Alaska does it with their oil fund. Basically, everyone gets a paycheck from the state. And what it boils down to is if you do it in a reasonable, not a big chunk, like everyone gets $100 bonus, right? But you do it as everyone gets $5 extra on their paycheck. It ends up adding to the economy. It gets spent into the economy in a reasonable way, not a big lump way. And what happens is you don't get these distorted supply demand issues. You just get more expenditures into the economy because the majority of people spend their money. They don't save. They don't do the things they should. And as a result, it booms the economy's demand. And when that happens, you can invest in supply and create higher amounts of production, which creates more jobs and has a positive impact. Anyways, all this is to say that things are relatively positive for the general person. I hope we don't go back into another greedflation sort of movement here. It is possible that we do. It's hard to predict that. But based on what I'm seeing, some of the larger players with larger amounts of money are actually pulling money out of the stock market. They're worried about a crash. And more realistically, I don't think they see more stock buybacks happening. They realize that this is telegraphed too much. It's on the wall. And I'm hoping that they use this increased productivity to reinvest in the labor force and invest in R&D, which is what has led America to be a top economy historically, because our investment in innovation has been massive historically compared to other countries, and it's kept us at the forefront. Anyways, that was enough soapbox there. Sorry about that. Just kind of got going there. Let's jump into some charts. I don't have any cards. Let's see. What did I say I want to look at? ARK Unlimited, yeah. And cases, ARK Unlimited, and Everfest. Yeah, let's do those. ARK Unlimited. Oh, we're here. We're already here. Yeah. So upward trend, as I was talking about. This is what we're talking about here. It popped back down to a place that's higher than it was before. Let's see how this stabilizes. If this goes to where we want it to be, we shall see. We shall see. I just want to double check this real quick. Yeah, that's correct. Okay. Just making sure. And then the other one, yeah, this box price dropping off like this, though. This has got to be an anomaly. We'll see. We'll see in a week or two. But if this doesn't pop back up, then I start getting a little more worried. Because if the boxes can't sell, then these cases aren't going to hold up, right? And we'll probably see this come back down. But let's see what happens. Let's give it a week or two. Right now, it's not too bad. And Everfest first edition. Yeah, that just fell off. I don't know. I have no idea. It's sad. I've seen it down at these levels before, over here, and then it spiked up like crazy. And it sunk back down and fell off a cliff again. Let's see if it spikes back up next week. That's all I got for this week. I hope you guys are out there cracking packs, playing games. Sorry, before I cut out. Next week I will probably be late. If I do it at all, I may skip it. I am out of town. I am doing high altitude hiking in Colorado. And I will be out there for a week or so, and so I will miss it. I guess I could have Tommy do it, but it's not that big of a deal. The data doesn't move actually that much, so I'm not too worried about it. If he wants to do it, he can do it, but I'm not too worried about it. We'll just keep it going. I may move which day this happens when I come back, because I'm finding that doing it this day is becoming increasingly challenging with my work schedules. Just my work schedule has it lined up exactly where it's annoying. There's a lot of big important things on the day that I need to do this. So moving it by a day and then releasing on Fridays probably is what I'm thinking, but we'll see. We'll see when I get back what makes sense. So I hope you're out there cracking packs, playing games, and enjoying this hobby that we all love. Until next time, have a good one.